Hi everyone, welcome to another live stream here. Hopefully you can hear me okay. If not, just let me know. So you're seeing the topic for this evening. We're going to be talking about common mistakes investors make, but I do want to kind of recap what we spoke about last time. And I'm going to pause for a second just to ensure that you can hear me before I continue. So let me know in the chat if you can hear me okay. Let me know if you can hear me. Just, a thumbs up, anything in the chat to let me know that you can hear me. Checking on Instagram as well. Okay, so I'm going to trust you can hear me. Okay, perfect. Thanks, Sean. All right, so last week we spoke about the keys to wealth being entrepreneurship and investing, right? So I spoke about the two of them being critical for wealth building, not just one. And we spoke about the importance of them both, and you really don't want to be doing one without the other. And I issued a special challenge. So I'm just reminding you all of that special challenge because at the end of this month, for 3 days, we're going to have a Start Your Business challenge. So the special challenge that was issued, I'll ask you to go back to watch the video. I won't explain it, give you a chance to do that. And for those who have taken the challenge, we're going to have something special for you. So yeah, I just wanted to mention that. All right. So before we get into the common mistakes, I do want to just say that these are mistakes. So this is not going to be a finite list. So I've been coaching persons for a while, doing financial consultations, helping persons to invest, to clear debts, to plan for retirement, etc. So in my coaching program, I work with a lot of persons, different backgrounds, etc. So this is really just from my own experience in what I've seen. Now, you may see other mistakes or you may experience other of maybe things that you find that you struggle with. But I'm going to talk about what I see in my coaching program and just from the investors that I've worked with and spoken to over the years. All right, so that's just some context before we go into this conversation. So let me just share one slide, and really I don't have much today in terms of slides because yeah. So that's what we'll be talking about, common mistakes. And as usual, just standard call to action. Join our investment community if you have not done so as yet. It's a free investment community on Telegram. We do have a WhatsApp group, but Telegram is where we all come together and we can talk about the different areas that you see here. So we talk about the US market, talk about the Jamaica stock market, we talk about real estate, we talk about any IPOs, APOs, rights issues, etc. And we do have a special channel for our investment challenge that ends in 3 months. So it's not too late to join the investment challenge. You can learn how to invest if you want to gain some momentum. That would be your best option right now because our one-on-one coaching is officially closed, right? We can't open any more slots, fully booked. So if you're interested in that, we should open that up again in January. And yeah, so join the community. They're free to join, free support, etc. This is the investment challenge that I mentioned. 3 more months to go, but you will have access to the other 9 videos that you'd have missed from January to September. And we cover so many different things. So this is the slide deck that I'm using right now, and we're at slide 430. Right, that's how much content we've covered over the past 9 months. So we've talked about things like, let me pull from one of our sessions here just to show you some of the things that we've covered. So I'm going to stop sharing for 1 sec and go back to just to give you one of the sessions for you to see some of the things we cover in the investment challenge. I'm going to pull from the last session that we did. Well, let me pull from one. I just want to give you a preview of what we cover, right? So that you can see what the challenge entails, so you can kind of make a decision as to whether or not you want to check it out, right? So let me share the goal setting one, because a lot of persons struggle with setting goals. So I want to share that. So these are some of the things. This is maybe the second to last session, right? This is just a quick preview. So we spoke about the fact that investment goals can be short, medium, or long term. And this comes down to your reason for investing, right? So if you're not familiar with setting a goal, the reason why you want to set a goal is that if you don't know how to answer the question, when do I buy, when do I sell, when do I hold, it comes down to this very first thing. Your investment goal determines that, right? So this is your reason for investing. And I'll actually be covering this in one of the mistakes that I'll speak about tonight, right? Persons not setting clear goals. Then we spoke about short term, what that means to me, because I've heard other explanations for short term, medium, and long term. So short term, 0 to 12 months, that goal could be I want to pay off my credit card. Medium term could be I want to pay off my credit card, maybe it's a large amount, and maybe I want to pay a deposit for a house, or I want to buy a car. Long term, 3 to 5 years or longer. And you see the type of goal that you have there. So it's, again, you can have multiple goals, not just one. And you can usually you want to make them time bound. So this is just some of the options. And we spoke about the considerations that you need to make. So you want to think about your objectives for investing. You can invest for growth, you can invest for income, you can invest for capital preservation. I'll touch on that again tonight, just slightly, when I talk about one of the mistakes in terms of persons and diversification. I'm not going to say what the mistake is yet. Next, time horizon. We spoke about that before, short, medium, or long term. So plan how long you plan to hold. And then risk tolerance is your willingness and ability to take on risk. And we looked at the risk triangle, let's call it that, last week, and spoke about your willingness to take risk and how that impacts how you invest, right? And I think one more slide. Yeah, this is it. So we spoke about this last week. I just wanted to show just a preview of what we covered in the investment challenge. I think this was for August. We covered this, right? And then for this same one, we went into research and we looked at different things that can help with research and so on. So we do this once per month, a monthly call to go into the just different things to help you become better as an investor. All right. So let's talk about the common mistakes. Right. Let me get my phone with my notes here. The very first mistake, and some of these are actually submitted by my co-founder, because I was asking her what are some of the mistakes she thinks that she has made as an investor. So some of these are hers, some of these are mine, right? So the very first mistake that I'll mention here is not having the right amount of patience. And I'm going to explain, of course. So I do believe, let me talk about one extreme first. So there are persons, I think, that have too much patience in the sense that they might have had, let's say they had a short-term goal of 1 year for a particular investment. Might be an IPO, because sometimes our goals for IPOs are in the shorter term because maybe we're not fully sure about the company, so we may set a short-term goal. That short-term goal may not have been realized, and so you are still holding that company years later. It could be 3 years, 4 years, 5 years. That's a definition of being too patient, in my opinion, meaning you've passed your deadline for the goal and you're still waiting. And nothing has changed, because if you're waiting 3, 4, 5 years and you're in profit, then there's nothing wrong with that. But some persons, they've exceeded their goal and they're still waiting, they're still holding, they're still trying to break even, and it's just not going where they expect. And if you think about it, the pandemic was more than 4 years ago, 4.5 years ago. So if you bought something before the pandemic, it's been down for 4 years, no recovery in sight. Because we're not, I wouldn't say we're near to a recovery, right? There are some industries that I think will recover and do greatly in the short term, and I'll cover some of them in my stocks to watch for 2025. But you're waiting 4.5 years and nothing has changed. Nothing has even, seemed remotely close. You're down 30, 40, 50%, and nothing. So that to me is the definition of too patient. And then now we have on the other side where persons aren't patient enough. So what I mean by that now is there are some instances where, and I think where persons aren't patient enough sometimes, I think it's just the quality of their research, right? Because maybe they actually have bought a good company and they don't know that they have a good company. And I see a lot of investors simply look at the price of the company as to whether or not they should buy. So they're thinking, I bought this investment. The price was $5 when I bought it. Now it's at $5.30. So I'm waiting to see if the price will move. When I ask them, okay, what do you mean? How did you choose the investment? What were some of the considerations? Why did you buy it? Why are you still holding it? You can't answer those questions, right? If you can't answer those questions, then you're likely in some trouble because you don't know why you'd have made that investment, right? So that's a dangerous place to be in, because I've also seen investors be in profit, but because they don't know why they bought in the first place, what they're looking for, that investment is really just sitting in their portfolio until for some reason they're compelled to sell, right? So let me recap patience. There's some persons who are more patient than they need to be. And that's really an extreme that I'm talking about. And then there's other persons who aren't patient enough, meaning they have not really taken the time to do quality research, to know what they have, to validate what they have, to determine whether or not that investment should still remain in their portfolio or not, right? So by the way, as I'm going through, feel free to give me your questions. These weekly sessions now are perfect for Q&A. If you have questions, I'll take them throughout. We're not going to wait until the end. This is also a perfect video to share with your network, share with persons you know who invest, share with your groups, share with your families, etc. Right? Because I want to answer as many questions as I can and help as many investors as possible. All right? Let me take a question here. What about you waiting for a company for 12 months? You've been buying and down 2%. Is it right to wait another year for the fundamentals? Wait another year, the fundamentals are good though and all. So I think you kind of answered your own question there, right? So if you've done solid research and simply, let me give you an example here. There are some companies that are positioned to do really well once interest rates go down or go down further, right? If that's the case, let's say that was a part of your thesis for a particular company, and I've explained thesis already. Did I explain it? No, I didn't explain thesis here. Sorry, that was the investment challenge. Let's say you had a thesis which involves interest rate being a factor for a particular investment, and you projected 12 months ago that the interest rates might have been lower now, and you're wondering if you should wait a little longer. Well, we've seen it trend down a little bit, right? At least by a few basis points. So if that is the situation here, it would make sense to wait at least for a few more of those announcements by BOJ to see if that projection for interest rates continues to trend down, because if the movement of the stock that you're hoping for is predicated on that, it makes sense to wait. If the company continues to be profitable, if it continues to provide good cash flow, sure, but it depends on the catalyst that you saw being the trigger for movement, right? Again, in the challenge, we spoke about the idea of a catalyst, because there's usually something that you're counting on to be what triggers movement, right? Some examples could be profitability. Maybe there's a dramatic increase in profit. Next could be a certain news. It could be an announcement of an acquisition, or some announcement of some great strategic decision, things like that, right? So hopefully that helps you, Humble Boss. Next question is, what if you set a time period for the investment, but the investment didn't meet the target? Should you keep holding? I feel like I just answered that question, right? It's similar to what Humble Boss was asking. It's really you to determine that. I can't answer in a broad way, but what I would say is you have to determine whether or not what you were expecting, if it is delayed or is it not likely to happen again, right? So let's say I was expecting a company to do a rights issue. So I think, for example, the stock may move on announcement of said rights issue, but now the company is not talking about a rights issue at all. You have no reason to believe it's still happening, at least in the short term. If that was your expected catalyst, of course, I wouldn't encourage you to buy just based on a news announcement, because I've seen that being used against investors or used to gain investor confidence, and it falls through, right? So that shouldn't be your only reason, but let's say it was that. If it didn't meet the target, should you keep holding? I said that if that catalyst is not likely to happen, you have to reconsider that decision, right? Hopefully that makes sense, Sean. And a good example is if you invested borrowed money and you had set a time to make profit, but the stock didn't make any upward movement. It's still a good stock though, right? I feel like, I wonder if you and Humble Boss have the same account. If you borrowed money, so we spoke about this last week, which is margin. If you use margin, so I used margin to buy Trans Jamaica when it IPO'd. So I had to pay that margin every month for months until I decided to ultimately sell, because I realized that my timeline for profit was longer. So I decided to clear the margin and bought cash, right? So because I realized that the timeline I was expecting would have been longer, right? So hopefully that answers your question. So that's how you want to think about that, right? Just checking over Instagram to see if we have any questions. Instagram family, if you do have questions, let me know. I'm talking about mistakes, common mistakes I see investors make, but I'm also doing Q&A. So if you have any questions, be sure to let me know. All right, so let's talk about mistake number 2. So this mistake, I think I can stay on for a while, right? I see this a lot. This is probably the number one mistake I've ever seen, where you buy once and not again. Let me tell you what I mean. And I want you to tell me in the chat. There are about 18 to 20 people here on YouTube, a few persons over IG. Let me know if you ever bought a stock, especially at IPO, You got maybe 5,000 units, 10,000 units, 15,000 units, and you never bought that stock again. Tell me if you've done that. I know many people who have done that. And here's the rough part about that. If you bought it at IPO and you're now up, but you only got 5,000 units or 10,000 units, let's say that stock is up now. Let's say that you bought Trans Jamaica in 2020. Trans Jamaica is up 200%, but you only bought 10,000 units. You never bought again. You're up 200%, sure, but that 200% on 10,000 is just $20,000, right? So if you had continued to buy more, your volume would be larger and you would be making a lot more money, right? So your average cost might not be IPO price, but what if you bought $10,000 every month? What if you bought $10,000 every quarter? You would actually be seeing a lot more in terms of profitability. Your dividends would be better. Your yield might be a little low, sure, but if you bought $10,000 every month, you'd be in a very good position right now. Of course, that's predicated on the stock doing well over the time. If your average price is higher than current market price, you're gonna be in a loss. But a lot of investors buy once, especially at IPO, and they never buy again. One of the biggest mistakes that I've ever seen, that I continue to see when I do coaching and I look at and I'm helping persons work through their portfolio, and yeah, so let me know in the chat if, okay, so as a favor saying me, anyone else have done this? Let me know. I feel like more of you watching have done it than you're willing to admit, but I don't believe I've ever had a client who did not do this. Trying to think back. Yeah, and let me tell you why. This is a very easy mistake to make because it's not something that gets talked about. It's not something we talk about. It's not something that I see brokers mention. It's not something that comes up. It's not commonplace to talk about it. It's not commonplace to look at how you can continue. So you've heard terms like dollar cost average. You've heard those terms before, but a lot of people don't actually practice it, right? Let me see a question here. Hey Shells, good to see you, by the way. What strategies are there for bringing down a price if you want to limit buy, or for bringing the price up if you want to sell? I'm not sure I understand, Shelly-Ann. Shells. I don't know if it's Shelly-Ann, I'm sorry. Strategies are there to bring down a price. Yeah, I'm not sure I understand what you're asking. If you're asking, for example, what's a good price to set, or you're asking what are ways to maybe what I call the cue gymnastics, where persons try to, I wouldn't necessarily say manipulate the cue, but give the impression that maybe just do certain yeah, I don't want to say what I want to say here, but can you okay, so when you're bidding on limit, what strategies are there to bring down a price? Yes, that what I've said a few things. Okay, so let me answer the question in a way that I think you're asking, right? So I'm going to rephrase it and you tell me, right? So are you saying that well, let me give you a chance to rephrase. All right. Yeah, Shell's rephrase for me. So if you're bidding on limit, let me talk about that in general for persons who may not be familiar. So there are many types of orders that you can do. Let me actually see if I can log into my JTrade account and show that to you. very quickly. Again, guys, I'm taking questions if you want me to take some while I am doing this session. I'm going to cover about 5 mistakes. I'm about halfway through. So let me know if you have any questions so that we can take them while I'm going through. I want to make this as practical as possible. Let me see if I understand what you're saying, Shells, right? So this is the Q now for energy, right? So we're seeing, so let me explain the Q very briefly for those who may not have seen this before. So the Q is essentially all the orders that are currently placed for that stock, whether buying or selling, right? So you have the buy side, you have the sell side, what we call a bid. So the buy side is the bid, sell side is an ask, right? So these are all the persons who want to buy the stock over this side. We have prices from $1.10 to 65 cents, and these are all the persons who are selling, and you have sell going from 116 all the way to $50, right? So there's one person who has an order for 4 shares at $50, right? So what I would typically do, let me see if you add some further context here. We want to buy cheap. If the current price is above what you're willing to pay, then you bid low, but you also don't want to be in the queue forever. Okay. So, I mean, what I would do there, based on what I think you're saying now, I'm just looking at the queue to see. I'm using the chart to show me the range in which the stock has been trading, right? So let me show you what that entails. Yeah, let me show you what I mean. So let's use the same energy, right? Let's use the same energy. What I would do, right? Let's say that I want to buy and I want to figure out a good price to buy. I'd be looking at this chart here. I'd be looking at the candlestick chart to find out the price that it's been trading at. So I'm looking at the low here, right? The low here was $1.10. And let me see if it has been any lower. So on October 7th, it was $1.05, $1.04. So there are a few things. There are so many things that can impact the Q price or the price that you're able to sell it for. Of course, you want to sell it at a price, for example, so if the price has been trending down, like Shells, there's so much nuance to this that I'd say. But what I would do, just to answer this simply, is I'd look to see what the price has been. So for example, there are certain days where the price is likely to go down. So let's say their report has come out and the report is not good. I know that if I've been waiting for that price to go down for a while and the report is not good, I have a very good chance to set a really low price within maybe the 2 or 3 days after the report comes out. I'm likely to get that order filled. I'm likely to get that order filled as well if it is, let's say, for example, an IPO is out and persons are taking profits, or there's another stock that is seeming to get all the attention. Persons may be willing to liquidate. So each queue, I think, is dynamic, where it's hard to say one set strategy you can use for all of them. But I'm looking at the candlestick chart. I'm looking at the range in which the stock has been trading. And then sometimes it could even just come down to setting an attractive number of units as well. Because sometimes I'll do that where, let's say I'm seeing average order amounts of like, let's say 100,000 units a day. but I set a buying order for maybe 250,000 units or 300,000 units, then somebody who's looking to get some cash may be willing to maybe just fill that order completely to get that capital that they may need, right? So a few things that you can do, but I personally don't like to set orders and leave it, especially for stocks that can be a little bit dynamic. Now, once I know what my sell price is supposed to be, that I will set and forget it because I may forget to place that sell order. So hopefully that helps. I know it may be a little vague. But yeah, so let me go back to the second mistake. So I'm talking about common mistakes. Second one I'm mentioning is buying once and not buying again. And I noticed a lot of you didn't answer, right? But as I said, I feel like a lot of investors have done this, right? Where they buy once and never again. And so they may be in profit and just not being able to capitalize on it, right? Let me tell you mistake number 3. So I'm going to cover 5 mistakes, right? Mistake number 3. Now, this was contributed by my co-founder. So this is Renee, one of Renee's pick. So Renee says one of her mistakes is not knowing how much she's actually making on that investment, right? So it could be that she's not tracking. She doesn't know how much. So first, I see persons don't calculate their cost price accurately. So you might have bought it at $1, but really it's dollar plus fees, right? So if you wanted to make 20% and you sold at $1.20, you're not making 20% because you paid fees to buy, you're now paying fees to sell. So you maybe made 16%, 17% at best, but you certainly didn't make 20%, right? Let me pause and take this question from Joanne on Instagram. What happens to your stock if a company goes bankrupt? Now, that doesn't happen every day, I would say, on the stock market, meaning for a company to reach bankrupt state, that you must have seen signs, right? There must have been signs to get there, right? But if a company does go bankrupt, let me just put the question here. If you own stock in a company that has gone bankrupt, now this is why understanding the makeup of the company is important, right? Does the company have preference shares out? Do they have debt out? Do they have bondholders? Because common shareholders will typically get paid last, right? So if a company goes bankrupt, it doesn't mean they have zero money. It just means they have probably they're not able to continue their operations. Maybe they have assets that they're able to liquidate. Many different nuances to that word, right? But as a common shareholder, you are really at the bottom of that ladder in terms of options, right? But there are usually signs, right? So Joanne, you're not going to wake up and a company you've been investing in, they're not going to be making, $50 million per quarter the last time you checked, and then you wake up, they're making a loss and they have no money and they have to close down. That's very unlikely. So this is why you want to be tracking your investments at a certain cadence. It doesn't have to be every week or every month, but at the very least, once per quarter. You want to be looking at that report. You want to be looking at the company's cash flow. You want to look at their current assets and current liabilities. Do they have enough to cover that? Are their debts increasing? Those are some of the things you're looking at, because if you're concerned about bankruptcy, then you want to just watch out for that. But it's not going to happen, just like that. It's something that you'll see signs. So you just have to be able to know to see the signs, all right? So Joanne, hopefully that helped. So mistake number 3, not knowing how much you're making, right? So let me show you Can I show you now? Am I set to show you now? So a simple way, I usually try not to go on Excel to scare anybody, but let me do a simple example here. Oh, look how I almost ended the stream because I didn't plug in my laptop. All right, let me share my screen again. Guys, keep the questions coming. I'm going to be live just for a little while longer, but I'm going to get through the 5 mistakes. So let me go through. Let me see which cell you're seeing. Okay, I think you're seeing my screen okay. All right. So we're talking about not knowing how much you're making, right? So let's say that you bought, let me see if I can use an example from my JTrader account as well. Show you how to calculate your fees. So I'll go to a transaction that I've done to show you guys. I haven't bought anything in a while. So I know I bought something this year at least. Okay, let me, ooh, I forgot about that order. Okay. Okay, let me choose this order. No, this is not a good order. I'm trying to find a valid order that I can actually share with you, so bear with me. Okay. Okay. So I'm gonna share this order. I'm trying to see what I can share because I don't want to share too much. I can't share my JCSD account. Okay. All right, so this is what I'm gonna do. I'm gonna take a screenshot here. Then I'm gonna share that screenshot. And just give me 1 second, guys. Why is my machine moving like this? I apologize. Okay, here we go. So I just need to hide my JCSD number, and then I can share my screen again. I may not use any controversial colors. So I had purple, but I have to remove that. Okay, all right, so I'm gonna share my screen. Are you able to see that? Let me know if I should zoom in. I think you can see, right? So this was an order placed for RPL, right? So what the very simple way to calculate your cost is just to look at, so this is the slip from JTrader. Let me see if I can zoom in. Yes, I can. Let me know if you can see it now, Sean. All right. Okay, better. So just bear in mind this the stock is RPL, right? So I would have bought 150,000 units, and I paid a total of 362,000 for those 150,000 units, right? So the selling price here, was this a buy or sell order? It says selling price. I guess this was me selling, but let's just assume it was me buying. Okay, because that's the example that I want to show here, right? So RPL here, 150,000 units, and the price that I paid was 362,058 cents and 47, right? So the price of the company was $250, right? But if I was buying this, the way to calculate my proper average price would be to divide the total amount you've spent by the number of units, and that would have been the cost, right? 150,000 units, I paid this amount for it. That was the field estimate. So my average cost would be this, right? Hopefully this is making sense. Let me look at it again to ensure that field estimate, maybe everything was not filled. Let me check to see. Okay, I hope I'm giving you guys a good example here. Hold on, let me check for this one if the entire order was filled. Order has been filled. This was a sale, guys. I'm so sorry. Let me find one where I'm buying. Okay. This is what happens when you don't prep these things before. So let me choose one where I'm buying. Okay. Let me go back. Find a buy order. Okay, so I found one here. Okay. All right, so this is a buy order. So I'm not going to share the screenshot again, but this one I bought 150,000 units of Dollar Financial, and the price I paid is $334,000, right? So let's work with that one. So this one is dollar, and I paid 334,000, right? So that means my average cost here is gonna be $2.23, right? So this is, in this case, a minor difference, but this little thing is gonna be important, right? And then when you look at this now, and you calculate how much you want to make, because sometimes you may say, well, I want to make 20%, I want to make a certain percentage. You can actually now calculate what that 20% would look like from this amount, right? So if you find 20% of this, factoring in your fees, so let's say you choose 25%, then that can give you a good price at which you can sell at now, because you've calculated your correct cost. Hopefully I didn't lose anybody here for this example. And I know it kind of took me the long way to get there, right? But the point is, mistake that I've seen is that a lot of persons don't know how much they're actually making, right? So I say someone here is saying that use a free account of My Money JA to track portfolio. Used to use Excel, but it was too much work. Well, Excel doesn't have to be too much work. Now, the tool you use, it doesn't really matter. If it works for you, then run with it. But you have to know what you're spending. You have to know what your cost is. That's the main point here, right? James saying that he's guilty of not being able to know how much he's making, right? Sean, I'm like you. I use Excel for everything as well. So I use Excel for everything. I even use it to track my payslip, and one day I'll share that with you guys. Let me take a quick question here from Humble Boss. What if you've been waiting for a stock to move for months, but it hasn't yet reached your sell target, and all of a sudden it goes back to square one after a while? I have a problem with that. All right. If you've been watching it for a while and it hasn't reached your sell target, then all of a sudden it goes down. So it depends on where that target is again, right? So I've seen companies like, for example, as Separate, 1 year, it just had a dramatic drop. It didn't last long, right? So if that's a sudden drop, it could very well be somebody just taking profit. That's what a sudden drop may be. If nothing has changed, I would just wait to see, but that's a risk that can happen with any stock any day. If I need to take my profit right now and I have shares in Dollar Financial, and the best price I can get it to sell for, because remember, if you want to sell and somebody wants to buy, Shells was talking earlier about trying to get the best price in terms of setting a low price. But remember, the only way you can buy is if somebody is selling. So for me to sell, for you to get it at a low price, I have to be willing to sell at that low price if I'm the one selling, right? So it may be a sudden drop for you, but it could be a great buying opportunity for somebody who was able to get it at that low price, right? Sean is saying, what are the fees that you pay? Not sure if you know the ones for NCB and JMMB. So let me go back to that screenshot I had taken. These fees should be standard. So it has here broker fee, JCSD fee, GCT. Those are the fees that you should pay. Now the broker fee varies per broker, and the JSC fee, I think, is a set percentage. I don't remember. I'm sure David has told us this before in Telegram, right? Most brokers are on the low side now in terms of fees, right? 2 more mistakes to go. Let me share mistake number 4. So mistake number 4. So this one is coming from Renee again. And so I guess Renee has fallen victim to this just like everyone has. So Renee's submission is buying on hype, not research, right? And I can add some more layers to this, right? So we've long seen the days of, IPOs doing 200, 300, 400%. I think we all agree that those days are no more. But that's not the only way that hype can appear, right? We've seen some companies kind of get this kind of, at the time, I'd like to say it's like they could do no wrong, right? No matter what happens, no matter what the CEO did, no matter what their performance was, the price would just keep going, keep going. That's a perfect example of buying on hype. There's also where there are certain activities that companies used to do that would be favorable, right? Like rights issue, like stock splits, even some acquisitions that weren't necessarily good acquisitions, right? So all of these are very nuanced, right? Not all rights issues are bad, not all stock splits are bad. So everything here is nuanced. I don't want anybody to say I'm calling out anything. I'm just saying if you are buying solely on a particular activity and there's no substance, right? There's nothing wrong with making an investment decision based on a solid decision that something may happen, right? But you have to understand the risk that comes with that, right? So if you're buying solely because a stock split is coming and you're hoping to be able to make profit from that stock split with no other fundamental factor, you have to be willing to take the risk that may not go as you planned, right? So I think that's the kind of sentiment captured here when you're buying on hype and not research, right? And again, it happens, right? It has happened to me. It has happened to a lot of people, right? So this one happened to me with RPL, and oh my Lord, it will never happen again. Humble Boss is saying, in this time on the stock market, your target price should be 100% for every stock, or that too optimistic? It's not optimistic, but you may have to wait a while. Somebody said this to me once, or somebody said it once, and I overheard it. You do have to get 100% from start to finish, right? 30%, 30%, and 40 is still 100%, right? And let me tell you what I mean. every stock trades within a particular range, especially last year or the year before with Trans Jamaica, it would just trade within a range. So you could get 20%, 30% within a month sometimes. So if your goal was 100% and you didn't take advantage of that, it trading within that band or that range, you would be waiting for a long. If you bought at $2.20 for Trans Jamaica and you're waiting for 100%, which would be $4.40, you'd still be waiting. But if you bought at 220, sold at, let's say, 260, 270, then bought when it went back down, then sold when it went back up. Let's say when it went back down to $3, when it was high as 373, and then when they announced the dividend, it went back up. Like, you could have had opportunities to get that 100%, but maybe you were waiting for it in a straight line, right? So James said, guilty of that too, but I always lose, so I learned my lesson. Yeah, so you have to pay to learn, right? Trifosa. Let me know if I pronounce that correctly. If you have short-term goals, what is the best way to go about that? That's very broad. I can't answer that without knowing some more context. And the truth is, there are strategies that you can use for long-term investing that can be used within short-term, right? There's no, you can do all the research, make a good buy, it goes up 100% in a week. You have no control over that, right? So the most important part is the research, right? We don't have any control over how high it goes, right? Ryan says about Tropical, thinking they were going to do a rights issue only for them to now say APO. Ryan, if the company never mentioned anything about a rights issue, why would you think that, like, why would you buy it expecting a rights issue? That doesn't make sense, Ryan. If a CEO doesn't say specifically that, I don't know what reason you'd have to expect that. Rosewell, yes. So I'm trying to do lives on Fridays until further notice. I'm not doing any announcements though, because it really depends. Next week I may not go live, who knows, right? But I'm trying to do at least once per week. That's my personal goal. I'll see how long I can do it, right? So we're recapping mistakes that investors make. So we're at mistake 4, buying on hype and not research. And this was an issue for me when I just started investing. Let me tell you the first hype stock I went into. Didn't know what I was doing, but I still made money. That was Pulse, and it was Chike. Shout out to Chike, who first told me about it when we had an LGI meeting. And then I went on social media. I was in some groups. We didn't have the LGI group at the time. So it was between Twitter and I think it was Devorid's group at the time, very long time ago. And I just kept seeing people talking about Pulse. So I was like, hey, I didn't do any research. I'm just like, let's give it a try. And I actually made money. It was before their last stock split or the one before, because maybe they did another, I'm not sure. I just remember buying at $4 or $5, and then it went to I think $12 and then split. So I did make money, but I did not do any solid research. I didn't know why it was going to go up. I didn't know why it was a good company to buy. I didn't know any of that stuff, right? And every mistake that I've named here, I've fallen victim to. So I'm not throwing shade at anybody. I've made all of these mistakes, right? So I'm going to ask you guys to let me know some of the mistakes that you have made or that you have seen, because I want to call out some of yours. Instagram family, I'm looking here. If you have any questions, let me know. We're going to the final mistake. Then I'm going to take your final questions. Then we're going to wrap up. So mistake number 5. What's Oh yes, I did not want to forget this one. And I can just see every broker having something to say to me after this one, but I make no apologies for it. Being overly diversified. I think I see that way too much. I'm going to explain what I mean, of course. So there are two ways I see persons being overly diversified. I'm going to explain only one of them, and I'm sorry, I'm not going to share the other. So being overly diversified is when you have 15 to 20 stocks or more in your portfolio, right? 15 to 20 stocks. And again, I was there. I bought everything that was mentioned, didn't know when to sell, had 5,000 units here, 5,000 units there. And before you know it, I had, I think at one time, 23 stocks. And I had to just make a hard decision and sell. So being overly diversified is an issue. And I'll tell you why. One, you're not likely to make any considerable profit being that diversified. If you have 23 stocks, let's say you found a winner. Let's say you had Dolphin Cove at IPO and it's just been amazing for you, right? You're up 400, 500%. It's amazing. But then you have maybe 4 or 5 stocks that even though you're up 500%, those are down 50%, 60%, 70%. Of course, you can't be down more than 100%, right? But all your losses make your average gain nothing significant. That's a perfect example of being overly diversified. So there's somebody asking, Ryan, what's the maximum amount of stocks you would suggest a portfolio to have? I'm going to ask you what you think. What is the number you think that you should have? What's a reasonable number for stock? Guys, let me know how much stocks you have in your portfolio right now. I want to share some of it on screen. How much stocks do you have in your portfolio right now? Tell me, how much stocks do you have? All right, let me type it. How many stocks do you own now? All right, tell me in the chat how many stocks you own right now. Right, answer in the comments. I'm not sure, Humble Boss. I know RPL report is coming out soon. I don't actually haven't heard about that. I'm not sure. Ryan says 10 to 15 is a comfortable number. Ryan, I need to talk to you. Ball game says I start with 10, now I have 4. Let's say Jamaican portfolio, because if you have US stocks and Jamaican stocks, I treat those as separate. Antoine says currently holding 13. Wow. Are you in profit, Antoine? David says 13. You guys, I have 7, want to drop it down to 5, waiting for the bull run. All right. I'm gonna wait for a couple more, right? Let me read out some of these comments. Roger said, one of my main mistakes was failing to sell my FESCO and I create shares when there were $7 and $4 respectively. I hope you're not still holding. You know what? Let me not do that. Roger? I'm sorry I'm laughing. Sean says I bought a very small amount of RPL at IPO because I was afraid to lose, but after seeing it run, I had to get a larger sum. Tried to sell at $3, but the stock only. Sean. Okay. Rosewell, I agree, can't be too over diversified. So I wish I was coaching all of you guys. I wish I was coaching all of. So this is perfect, right? Your overall portfolio is up by 5%. So Antoine, if you didn't imagine if you had 6 stocks, 7 stocks, my guess is that overall percentage gain would be higher, right? That would be higher. And that's my point. When you're overly diversified, you are not going to make anything meaningful because you have too many stocks. Now, there's a right number of stocks based on your objective, right? So I can't say a number. It depends on what you're trying to do. Shells, you're not gonna put words in my mouth, you know. You're not gonna put words in my mouth. James said one of my biggest mistakes is to see an opportunity and taking advantage, thinking I'm too late. Yes. Shells, I never said anything. Roger, are you new? I don't think I've seen you before, Roger. Why don't you think 6 is enough? Tell me why. You're not new, Roger? Then I'm sorry. Maybe you don't comment enough. Maybe that's it. Okay. So we need to know when to sell and not betting on higher gains, no matter how the stock may hold value trade down. I wish I could lead a topic just on this, but unfortunately, these are the type of conversations I save for the challenge only because it's nuanced and I would have to explain the nuance. Overall percentage gain is 18%. That's good, Sean. My overall percentage gain now, I think, is 80%. That's my overall average right now, about 80%. You're from Philly. Okay, cool. Or you're living in Philly. Nice. Okay. So let me recap. And I probably should have started the 5, right? Because I want to recap them before I go. Guys, final call for questions, please. For those who are new, please subscribe to the channel. Please take a moment to like the video. All the regulars, please like the video. Okay, so I'm going to recap the 5 now. I'm going to recap them very quickly. So the first one is patience. We spoke about the different kind of extremes in patience. Some persons are too patient, believe it or not, and some don't have enough, right? So patience, definitely one of the mistakes I see in coaching, in consultation. I've coached, have I coached more than 100 people? If I'm not at 100 yet, I'm close. And that's just something that I see a lot. Mistake number 2, buying once and not buying again. Bought it at IPO, you got 5,000 shares, 10,000 shares, maybe even 20,000 shares, and you never bought again. Big mistake that I see. I actually say if you don't have a reason to sell, then you also don't have a good reason not to buy more, right? Mistake number 3, not knowing how much you're making. Are you in profit? Have you calculated your cost price correctly? Are you tracking your investments? That's very important. Mistake number 4, buying on hype and not research. So you bought because you just saw the news that they were going to split the stock, or you saw the news that it's an IPO and it's the first one of the year, or it's the, all the brokers are maybe saying it's a great buy. That's not a valid reason, right? That's why we always do IPO reviews. That's why we always do stock reviews. You want to buy on substance, not hype. And mistake number 5, which is what we're talking about now, being overly diversified. All right, so you notice I didn't say being diversified, right? being overly diversified. If you got 23 stocks like I did, if you have 23 stocks, if you have 15 stocks, I'd say that too much. Right now I combine my portfolio and Renee's, so together we have 10. So between the two of us, we have 10 stocks. All right. So those are the 5 mistakes. Let me read any last comments here. Karen says, I have 15 in total and 5 of them are preference shares. Why you have 5 preference shares, Karen? 5? 5? Right? 5 preference shares? That's very interesting. Listen to me. You are comparing your capital to Mayberry. That's what you're saying. Mayberry has 20 stocks in their portfolio. Are you comparing the diversification? There you go, ball game. Billions, right? Billions. Do you think it makes sense to keep buying a stock even if you're already heavily invested, or is there a limit? Again, if you do have a good reason to sell, why would you not keep buying? How can you have too much of a good investment, right? But of course, if you buy too much, you may become concentrated in that one stock. Be careful. Just watch that. That may not be something that you want to do. Who are you answering here, Roger? Because your portfolio is not diversified enough. Is that for me? Because I said I'm up 80%. Inconsistency is my thing. Shade. So you can join. Well, I was gonna say join our coaching program, but you can't right now. But the next time we have coaching, feel free to join, or you can join our investment challenge. Though we have 3 months of that, we can help you with that inconsistency. Sean says, I noticed that there are a lot of stocks on the market that make amazing gains and lose everything within the same period you set out to hold. Would it have been better to sell at a certain point? You know what? I'm gonna bookmark this, and I'll comment on it one day, but not today. So buying once, depending on how much you are allocated at IPO, yes, anything below 30K shares allocated does not make sense to me. So Shells, for me, that number is 250,000. Anything, if it's an IPO, that means that's what, $1, $2. Anything below 250,000 shares would be too little for me, right? Sean says diversification is protection against ignorance. It makes little sense if you know what you are doing. Warren Buffett. I'll leave that one alone. Leave that one alone. I'll leave that one alone. Roswell says, one thing to keep in mind is that even when a company is not doing well according to the person's outlook, it may start to perform and use it is the next big stock. So I buy undervalued. Okay. Ash the guy says, apart from trading in practice, do you read any books, and which do you recommend to a new investor? Books. So unfortunately, all the books I read in terms of investment are based on the US market. So I wouldn't recommend any of those, honestly, because our market is a little bit different. The best lesson for our market actually is either personal experience or just learning from somebody who has had success in this market, is what I would say. Because any investment book that you read outside of Jamaica is going to tell you to buy and hold. It's going to be mainly like long-term investments. If you read trading books in the US, it may not give you specific strategies for Jamaica, unfortunately. So no local books I'd recommend right now. But my book probably, well, I don't think my book will be on trading. So I want to keep buying more Trans Jamaica, but I feel like I have too much. It now takes up more than 50% of my portfolio, and I really feel like it's not good. Sean, do you have more than Andrew Holness? If you don't have more than Andrew Holness, I don't think it's a bad thing. Karine is asking, is concentration a bad thing? You know, I like this question. That can be a topic for a video. Karine, I like that question. Thank you. I'll answer it shortly. Roger says, but it depends on the diversity of those stocks and your investment goals as well. Diversified portfolio typically includes stocks from different sectors and industries to reduce risk. That reduction of risk also reduces your profitability, Roger. Something to bear in mind. Learn, grow, invest. I mean, after you factor in oversubscribed, then they're giving you exactly. Yes, I agree with you. Then I agree with you. Thank you, James. Let me see how many persons have liked the video. So we've had 190 persons passing through, and we have 22 likes. Wow, guys, please, free content, valuable content. Please like the video, please. Personal experiences is a good metric for Jamaica market. Yeah, so yeah, and that's why I do things like stocks to watch. That's why we have our free classes each quarter. That's why we have our investment challenge. That's why I do coaching. So yeah, just a few more comments and then I'll wrap up. I know you already have a stocks to watch segment, but can you make a video on what stocks you think will benefit the most from the bull run? So I'm gonna have a my stocks to watch for 2025. It's coming out very soon because we have 2 months left to go. It's gonna come out maybe by the end of November. So I'm gonna do individual videos on 3 stocks from the junior market, 3 stocks from the main market that I'm gonna be watching for 2025. I can give you guys a preview of it. No. It's coming out soon. Turn on notifications, subscribe to our mailing list, and you'll see it. You're collecting dividends. Why concerned about Trans Jamaica? Sean says Trans Jamaica has a lot of debt on its books. Is not exactly the safest stock. Sean, message me, please. Send me a DM on Telegram. I want to talk to you. Roger says 14 stocks and 6 ETFs. Are those 14 stocks all on the Jamaica market, or is a combination between Jamaica and US? Let me know. All right. So let me know. So there are 2 things, right? Let me answer this one. Karine, I know that name. Thank you so much I think you've been a part of our community for a long time. Thank you, Karine. Thank you to everyone who is here. 49 persons on a Friday night. I appreciate it. 22 likes though. I'm not sure I appreciate that, but I know it's really hard to press the like button. It's kind of far. You know, you're probably watching and driving or watching and doing something else. But when you do come back to the phone or when you look down on the phone again, just press that like button, please. It would greatly help. All right, Karine, is concentration a bad thing? So concentration is the key to building wealth. Diversification is the key to maintaining wealth, right? That's how I answer that question. So concentration is key to building wealth. Diversification is key to maintaining wealth. So that's my answer for you, Karine. So Sean had said, I noticed that there are a lot of stocks on the market that make amazing gains and lose everything in the same period. Would it have been better to sell? Short answer, yes, right? A part of your research, and again, we covered this in our investment challenge. There are there are factors to look for, right? You're not buying and selling in a vacuum. You want to look at how investors are responding to positive news, to positive performance, to announcements. So that has to adjust your approach to investing, right? So if you are somebody had said, I think his humble boss said, I have to wait for a minimum 100%, but I also said that the 100% may not be a straight line. And if you're waiting for 100%, but you can maybe buy and sell that stock over a year at 30% profit each time, and you do that 4 times, that's 120%. So you don't have to wait for it to be up 100% because it may never get there in the short term, right? Okay, Roger, I see. Ball game says, why do these dividends take so long? It's based on the payment date. When it takes us a lot of administration. When we had the Trans Jamaica managing director on, he said the administration for dividends is ridiculous. I think Trans Jamaica had 15,000 investors. Imagine processing all of the amounts, creating those dividend payments, making the lodgements or the bank transfer for those who have the dividend mandate. It's a long process, so they typically want to give it 2 to 3 weeks just to prepare the transaction. So it's not a simple thing, right? Those are 2 valuable factors of wealth that you just mentioned. Yes, concentration to build wealth, diversification to maintain wealth, right? I don't agree with you, Anthony. You should keep your stock as long as Warren Buffett does. You don't know if you're going to live that long. You don't know. I don't agree with that one. All right, guys. James. I can't answer. I'm sorry. I can't answer. We have 35 likes. If we get to 60 likes in the next 2 minutes, I will answer this question by James. All right. Let me check on Instagram. All right, persons over Instagram, let me know if you have any questions. I haven't seen, we got 1 question from Joanne on Instagram. But guys, let me know if you have any questions. These sessions are for you. And it's for me as well, actually. So Sean, I did say that I have, my wife and I combined, we have 10 stocks. So I think she has 3, I have 7. Yes, Karina, I do remember you've been here for a while. Thank you so much. Thank you for being a part of our community. And let me share the link to the Telegram group, just in case there are persons here not in our Telegram group. You're welcome to join. So this is the Telegram group link here. And let me see if we have those 60 likes. It's been 2 minutes. If we don't have 60 likes, I can't answer James's question, and we don't, so I won't answer it. All right. Don't go investing. There is a limit for JA stocks. What's the limit on US and international stocks? So because of the exchange rate, Shells, I'd say, I think 5 is reasonable for the US market because it's going to take you longer to build considerable volume there. It's going to take you a while. So you don't want to have too much there either because you have the exchange rate to contend with as a factor for you to gain volume. Because I have NVIDIA shares, I have single digit. I don't even have that much because it was so expensive, right? I have Microsoft shares. I have maybe about, I don't remember. I have less than 100 Microsoft shares. right? That's how much, like, it costs a lot more to buy it, right? Um, their exchange rate costs, their transfer costs, it's much more expensive. Of course, you can make back your money a lot quicker on the US market, but I'd say 5, and then if you want to get into any funds, that would be good. Or you could just, I'm actually all for the ETFs in the US, actually. I think you have some good options there, some good returns, and yeah. All right, guys, thank you so much again. I'm really enjoying these each week. Turn on notifications if you are new to the channel, so you can know when I'm going live. So you have to subscribe and turn on notifications. So if you've turned off notifications for YouTube, then you won't be able to see it. We do send out an email from time to time, but we don't send out an email every time we go live, and that's because whenever we send out an email, I notice we lose some subscribers. So sometimes I'm afraid to send out any email because I'm afraid persons are gonna unsubscribe, right? And I don't know why you'd subscribe to a mailing list and then unsubscribe when we send you an email. I don't understand. But I'm sending the link to our newsletter and sending the link to our Telegram group for Anthony, who just asked for it. Can I start the live 30 minutes earlier or later? Yeah, start the video the same time prime time news starts. Which one is gonna help you with your investments, Sean? Prime time news or live stream? Don't answer that question. All right. All right. Okay. I think that. Okay, all right, guys, thank you so much. I really appreciate all of you. Let me check to see if there's any announcements that I need to make. So our Grow Your Wealth conference is coming up. Okay, yeah, let me do these. Shell says primetime news has not changed in 20 years. So, boy. Yeah. So our Grow Your Wealth conference is coming up, and that's actually focused on investing and entrepreneurship. So if you are an investor, you'll actually find great value in the conference. We're going to be talking about the top. You'll see the list of topics coming out, I think, this week coming. Early bird tickets are still available. We sent an email to you, our community members, recently. Please look for that email. Please purchase your tickets. Early bird sale ends, I think, the end of this month, so you do have a lot of time left. The investment challenge is still 3 months to go. It's $30 a month, and I can tell you from now, when we run this investment challenge next year, it's not going to be the same price. That's for sure, right? So, and then finally, we have the Start Your Business Challenge coming up in a week and a half. We're going to give you everything you need to start your business, branding, marketing, that stuff, all the legal stuff, types of registration, naming your business, that kind of thing. We're going to help you with over 3 days. All right. I watched the Dollar Financial meeting and saw you. Okay, I got you. But just turn on notifications. We will likely go live at least once per week, likely on Fridays, but we can really go live any day. All right. Thanks, guys. Let me just queue up a video before we close off. This is a video for our conference, for those who may not be familiar with it. And we're just gonna run that to go. Thank you guys so much. One final check to see if we have any questions. Hopefully I got some good questions answered. I think I answered everybody's question. Thank you guys so much for being here. Please, again, take a moment to like the video. subscribe if you're new, and I will see you again very, very soon.
The Grow Your Wealth Conference is almost here. If you're a seasoned or aspiring entrepreneur ready to elevate your business and personal finances by learning from experienced, impactful, world-class entrepreneurs, then this conference is for you. Grow Your Wealth is happening over 2 days in Kingston, Jamaica, with unique speakers, business networking opportunities, actionable teachings, a business pitch competition, and access to an engaged community. So save the date and get your tickets now. Tickets and more information are available at learngrowinvestconference.com.